Kia ora and good afternoon, everyone. Today I'm joined by Finance Minister Nicola Willis to outline the steps that the government is taking in response to the Commerce Commission's report on competition in the banking sector. You will recall that the Commission reported in August that the banking sector was uncompetitive and New Zealanders were not well served by a highly profitable two-tier oligopoly. In particular, the Commission called attention to a lack of obvious or aggressive price competition. Commission Chair John Small said that in a well-functioning market with strong competition, we'd expect to see aggressive strategies to win customers from other banks. What the Commission found instead was little strategic differentiation and growth targets that focused on maintaining market share and protecting margins and profitability. This means there is limited investment in innovation, muted competition between the banks, and poor service for some demographic groups. And frankly, that is not good enough. The government shares the Commission's concerns. We want to see vigorous competition between the banks on prices and services. The Commission made 14 recommendations to improve competition in the banking sector, and they fall into four broad categories. 1, better capitalising Kiwibank to enable it to be a disruptive competitor to the big banks. 2, accelerating the development of open banking. 3, removing regulatory barriers to entering the market. And 4, expanding and putting more power in the hands of bank customers. And we intend to implement all 14 recommendations. In short, we want to disrupt the status quo. And today I can confirm that Cabinet has agreed that it is important that Kiwibank is able to access more capital so it can compete more vigorously for business and home loan customers. We know Kiwis want to support a local bank, but they will not, nor should they, sacrifice good interest rates or competitive returns. New Zealand savers and homeowners need real choice, and we need to level this playing field. We intend to pursue a capital injection into Kiwibank. Final decisions will be made next year. However, current expectations are that up to $500 million will be needed, and Nicola will shortly run through how we will progress that work. We are determined to do everything we can to get this economy pumping. And that means building on the gains that we have already made on bringing down the cost of living and seeing lower inflation and lower interest rates. We're not going to grow this economy by doing business the way this country has always done business. We are not going to lift standards of living, improve educational and health outcomes, and restore law and order by resisting change. This is our opportunity to power up Kiwibank to take on the Aussies, and we are up for it. More competition means a better deal for Kiwis. So if you have a mortgage, you get to keep more of your own money to support you with the cost of living, to invest in your community and to save for your retirement. I want to see banks fighting tooth and nail for Kiwi customers, and this is the first step in achieving that vision. I'll now hand over to Nicola, who will outline our plans for the banking sector. Nicola.
Thank you, Prime Minister. As you said, we want to see more competition between banks, increased investment and innovation, and better service, particularly for some of the businesses and people who are poorly served by the status quo. As the Prime Minister said, the government is accelerating moves to provide Kiwibank with access to more capital. Kiwibank's parent company, Kiwi Group Capital, and the Treasury have been directed to talk to New Zealand KiwiSaver funds, New Zealand investment institutions, and New Zealand professional investor groups about a potential investment of up to $500 million in Kiwibank. Better capitalising Kiwibank will enable it to compete more vigorously against the big four Australian-owned banks. New Zealand is often seen as the little brother against the Aussies. We want to give that little brother a little bit more muscle to get a fairer deal for Kiwis. Advice to the government is that an additional $500 million of capital could support up to $4 billion of business lending or $10 billion of home lending. That is sufficient to add competitive pressure to the market and potentially benefit customers of other banks as well as Kiwibank. I expect Kiwibank's parent company and the Treasury to report back to me on options by about the middle of next year, at which point Cabinet will make a final decision on whether to proceed with a capital raise. It's important to note the government is not considering selling any of the shares it currently holds. In the longer term, a future government may consider the possibility of a public share offering, but no decision on an IPO, initial public offering, will be made during this term of government. I've been advised that Kiwibank would not be in a position to consider the possibility of a public offering until it has completed its current digital transformation project, which is not scheduled for completion until 2028. The government understands, of course, that before making any investment, any institutional investor will likely want an exit option. So if a public offering is not approved at a later date, I'm advised this exit option could take the form of investors having the option to sell their shares back to the Crown at an independently assessed fair value. Today, I am also announcing that I have issued a revised financial policy remit to the Reserve Bank, along with a letter of expectations, emphasising the importance the government places on competition in the banking sector. The new letter of expectations to the Reserve Bank outlines our government's expectations that the bank must prioritise steps recommended by the Commerce Commission, including expanding access to the exchange settlement system with decisions by March next year, reviewing risk weighting for a range of bank lending, including agricultural lending and lending to community housing providers and lending for Māori housing on freehold land, reviewing minimum capital thresholds for new entrants into the banking sector, reviewing restrictions on the use of the word bank, working with industry to make bank accounts more widely available, and dismantling barriers to lending for housing on Māori freehold land. Finally, today we are putting the major banks on notice. We expect them to act on the Commerce Commission's recommendations, including through improvements to the bank switching service and open banking reform. Our message to the banks is this: the time to act is now. If you drag your heels, the government is leaving open the possibility of further action. Our government is determined to get a better deal for New Zealand banking customers, and the steps we have announced today should drive that. Competition is king. Prime Minister, back to you.